Good morning, it's Monday the 16th of January and welcome to our regular Monday morning roundup of the coming week's economic highlights. As always, we'll start with a quick rundown of the key economic numbers being issued this week around the world's markets and then dive into some of the more significant highlights afterwards with our own thoughts and analysis. So let's get straight to it. So the economic numbers being issued this week start today with an update on the Australian consumer confidence numbers. On Tuesday, China releases its latest GDP figures, Germany its ZEW economic sentiment numbers, and we also hear the latest unemployment situation here in the UK, and we'll talk about all three of these stories in more detail afterwards. And to wrap up Tuesday, Canada also releases the latest CPIs. Wednesday is interest rate decision day in Japan, and the UK releases its latest CPIs, and over in the US, they release their latest retail sales figures. And again, we'll talk about all three of these stories afterwards. On Thursday, Australia releases its latest employment statistics, and the ECB minutes from the last meeting are released, and the US releases its latest jobless claims. And on Friday, the UK retail sales figures are updated and existing home sales over in the US. And the companies that we'll hear trading updates from this week start on Tuesday with Q4 earnings from Goldman Sachs. And we'll give our thoughts on these straight afterwards. We'll also get updates from Morgan Stanley and Crest Nicholson. Wednesday brings Q3 results from Burberry, and we'll discuss these in more detail in a moment. And results from Alcoa and United Airlines. On Thursday, streaming giant Netflix releases its final quarter results of the year, and we'll discuss these at the end of today's video. And Thursday also sees updates from P&G, Premier Foods and Boohoo. And finally, to wrap up the week on Friday, we'll hear from Schlumberger. Well, US inflation was the key theme for last week after data showed that CPI continued to cool in December. And as we head into the new week, inflation is expected to remain front and central, with CPI data from the UK, Canada and Japan, along with the Bank of Japan interest rate announcement due on Wednesday. US earnings season is also ramping up with Goldman Sachs and Netflix under the spotlight. So let's take a look at this week's bigger stories in more detail. On Tuesday, China are due to release their latest GDP figures. Well, economic activity in China has slowed considerably amidst a surge in coronavirus cases, just as the country lifted lockdown restrictions and rolled back its zero-COVID policy. Consensus estimates point to China's GDP shrinking 0.8% quarter on quarter in Q4. That's a sharp drop from 3.9% growth in Q3. As infections rose, consumer spending slowed significantly, with retail sales dropping 5.9% month on month in November, marking the first fall in sales since May. Retail sales for December are expected to have fallen a further 8.3%. Industrial production is also expected to see growth slow to 0.5%, and that's down from 2.2% in November. Well, Tuesday sees the release of the latest employment statistics here in the UK. Unemployment here rose to 3.7% in the 3 months to October, and while this was up from 3.6% in the 3 months to September, this remains a historically low level. Interestingly, the number of payrolled employees rose to a record high of 29.9 million, which points to people returning to the labour market amidst the cost of living crisis. Wages in the UK have been rising, although they haven't kept pace with inflation. Average weekly earnings, including bonuses in the UK, rose 6.1% year on year in the 3 months to October, up from 6%. Expectations are for wages to rise 6.1% year on year again in the 3 months to November, and that's a figure which could unnerve the Bank of England and suggest that higher wages are becoming normalised, which raises the likelihood of inflation becoming entrenched. Well, German economic morale is expected to rise again this month as the country releases its latest ZEW sentiment figures after climbing in December to its highest level since Russia invaded Ukraine. Optimism that the Eurozone's largest economy has avoided a severe energy shortage coupled with cooling inflation and China reopening is bringing hope that the German economy could see a shallower recession than initially expected. The DAX traded at a 9-month high last week. So could an upbeat German ZEW economic sentiment reading lift the index higher? We'll find out on Tuesday. And finally on Tuesday, Goldman Sachs is set to report Q4s after announcing that it will cut headcount by 3,200, or 6.5% of the workforce, to cut costs that have been rising rapidly and squeezing margins. All costs are being scrutinised, including bonuses and 2 private jets, as economic uncertainty puts the lender under pressure. Revenues at the bank have dropped 20% in the first 9 months of 2022 versus the previous year. The share price is down 11% across the past 12 months, outperforming the S&P 500. Well, the Bank of Japan is set to announce its first monetary policy decision of 2023 on Wednesday. The most dovish of the major central banks surprised the market last month by unexpectedly widening its target band for the 10-year yield, which sent yields roaring higher and the yen below 130 versus the dollar. The Bank of Japan is starting to move away from its ultra-loose monetary policy in preparation for the new Bank of Japan leader in the spring, and he'll replace Haruhiko Kuroda. Investors will be watching closely for further adjustments to the yield curve control that then, of course, could lift the yen. And Wednesday also sees an update from the US on its latest retail sales figures. Sales fell 0.6% month-on-month in November, missing forecasts and declining by the most in 11 months, pointing to a softening in demand for merchandise. In December, sales are forecast to fall a further 0.5%, highlighting a loss of momentum in consumer demand for goods amidst, of course, high inflation. While pandemic-era savings had supported shoppers, there are signs that they are starting to feel that squeeze. Well, CPIs here in the UK are also due out on Wednesday. Now, inflation in the UK fell to 10.7% year-on-year in November. That was down from 11.1% in October, its highest level since 1981. Falling oil and gas prices and a cooling PPI suggest that inflation here may have now peaked. December CPI is expected to show that the trend of cooling inflation continued. That said, inflation is still likely to remain stubbornly above 10%, owing to elevated food price inflation, which persists in the mid-teens. As a result, the Bank of England will likely raise interest rates again in the upcoming meeting. And finally, on Wednesday, fashion retailer Burberry are due to release Q3 results. Despite the challenging macroeconomic backdrop, Burberry has had a solid year, reporting double-digit sales growth, improved margins and stronger profits in the first half. Q3 results are expected to show retail revenue grew 30% annually to £942 million, thanks to improved full-price sales and the boost to sales seen in the holiday shopping period. China is likely to have underperformed in that period. However, with the country reopening and with COVID cases falling, China could return to being a primary driver of growth. Meanwhile, the US could see sales improve in Q3 owing to the US dollar weakness. And finally, Thursday sees final quarter results from streaming giant Netflix. The company's share price fell to a 52-week low of $160.71 in May last year, before rebounding 75% higher, helped by 2.41 million new paid subscribers in Q3. That was well above the 1 million forecast. The streaming giant forecast that 4.5 million subscribers will be added in the final quarter of the year. However, there are doubts about whether this will actually be achieved. Revenue was also ahead of forecasts in Q3 at $7.93 billion. That was up from $7.85 billion, and profits were $3.10 per share. Wall Street expects an earnings per share of 36 cents, down on revenue of $7.84 billion. The operating margin is expected to fall to 4.2%. That's down from 8.2% a year earlier. So those are the big stories of the week. Let's wrap up with a quick look at the dividend announcements due out this week. In the FTSE 100, we'll hear from Compass Group. And in the FTSE 250, we'll hear from Diploma, Future, AJ Bell, Victrex, Games Workshop Group, Balance Commercial Property Trust, Supermarket Income Right, 24 Income Fund and NB Equity Partners. So there you have it, some important numbers coming in this week and hopefully more indication of what's just happening with that ever closely watched inflation. It seems to be teetering on the point where some indicators imply it may finally have peaked and start falling, yet its pervasive effects now filtering into the system at a more fundamental level, particularly salaries, and we're seeing that in the increasingly militant demands in the public sector. And that could mean it may be just drawing breath. We shall see. But as always, we're here at Atlantic Capital Markets to keep you up to date with the latest opinions and, of course, our expert analysis. So as always, let me remind you about our app with our award-winning 2 years in a row trading signals, and I will stop going on about it soon, but we are very proud of it. So why not check it out for yourselves? It is free and it does work on all your devices. So once again, thanks so much for watching, and don't forget to click on that subscribe button to make sure that you don't miss out on our regular financial updates with our expert market analysis and opinions. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.